John, there seems to be a lot happening at the moment, and you point this out in your morning notes. We had the Japanese central bank intervening quite aggressively in the forex markets there. Switzerland looking into something similar to perhaps weaken the Swiss franc, and a lot of other countries on top of that as well.
Yes, this is the theme that has been growing for some time. Essentially what it reflects is significant dollar and euro weakness. So almost every currency around the world is at record levels against both the dollar and the euro. And a lot of countries, South Africa being one, Japan being another, are very unhappy with the strength in their currency. Obviously, we're all reliant on the export sector to get us out of the Great Recession, and we don't want this currency strength. So more and more countries coming in. Japan's a big one. It's obviously the third largest economy in the world. That the Bank of Japan has come in. This shows a signal. A lot of people out there are getting very unhappy with these currency movements.
How effective, though, can the Bank of Japan be with those currency interventions? Because it hasn't been very successful in the past, and it's going to take a lot of firepower to actually weaken the yen. Yes,
just an important theme. The Bank of Japan is buying dollars, similar to the South African Reserve Bank. There's no limit to the amount of dollars that you can buy. It's asymmetrical in that sense. There's a limit to the amount of dollars you can sell. So you have a limit in how much you can stop your currency appreciating. But you can go out there and buy as many dollars as you want. So generally, intervention to stop a currency appreciating tends to be more successful. Japan has also done unsterilized intervention. That is the sense that when they intervene in the market, they're injecting money, growing money supply, and hence it's a form of monetary stimulus, easing a monetary policy, which should typically be weaken your currency as well.
Just looking at the fundamental drivers that surround Japan at this point in time, we know it's a deflationary environment. We know the economic prospects do not look fantastic, and a stronger yen is obviously impacting those key exporters as well. Why do you think we've been seeing the yen appreciating so much? Because it seems for now that borrowing cheaply in yen and then reinvesting the funds in riskier assets, perhaps a favorite pastime for most investors on a global level. Do you think that is the key factor?
No. Essentially what I think is happening is that we're seeing both dollar and euro weakness. So you're getting really contrasting themes. Think of the fact that you've got yen at record highs, you've got gold price at record highs. Both those are assets or currencies that typically gain when investors want to move to safe havens. But at the same time, you've got the rand and other risky currencies also at record highs. Those are currencies that you want to get in when risk is on, when you want to take on risk. So you've got both risky assets doing very well and very safe haven assets doing well. So to some extent, it can reflect a divergence in market view. Some people think the world is coming to an end. Some people think we're going back to boom times. But more to the point, what it reflects is actual dollar weakness. Rather than
the yen is reflecting dollar weakness at this point in time.
So it's not so much that the rand is strong or that the yen is strong, it's that the dollar is weak. It's what we're comparing those currencies against.
And of course we talk about that wad of money that's been flowing into emerging markets, and South Africa has received about 100 billion rand so far this year. And you can't stop that. So is there anything that the authorities can do to keep that money out of the country and stop the rand from appreciating?
There's lots of options that the authorities have. Already in South Africa, we are seeing them intervene in the market, buying up approximately $500 million from the market in August. And probably so far, it
could have actually been stronger than it is at the moment.
Yes, it would have been stronger than it is if it wasn't for the Reserve Bank. And probably the Reserve Bank is even in the market, even to a much greater extent this month. We've also got the option of easing exchange controls. And I struggle really to understand why the authorities don't pursue this more aggressively. In the 1990s, when we eased capital controls, allowed money to flow out of the country, it did lead to a weaker exchange rate. I think the authorities should pursue a similar format this time around, and in fact, perhaps time to abolish exchange controls completely. There are more extreme measures. You could cut interest rates, you could impose taxes. We certainly wouldn't suggest that the Reserve Bank follows that line at all.
How about those longer-term swap transactions that the Reserve Bank governor spoke about when she gave the MPC press conference a week or so ago?
Yeah, Stephen, those longer-term swaps are a way of dealing with the money market liquidity that is the result of intervention. It doesn't have any impact on the currency market. Essentially what's happening is the Reserve Bank is buying dollars from the market, so it's injecting rands, it's boosting money supply. It needs to offset that, sterilize it, we say. They're using the swap transactions to offset that, to stop any money market influence from the intervention.
Do you think that interest rates are the way to go if you want to weaken your currency going forward? We saw a 50 basis point cut last week. It obviously hasn't done very much to weaken the currency. Some are divided. Some say it's fantastic, we need to use it as a tool. Others say that it's not going to help very much.
Our view at Rand Merchant Bank is that the Rand is sensitive to the exchange rate, but not very sensitive. You know, if you cut rates, yes, that will weaken the Rand at the margin, but there are much bigger factors at play. Essentially what Stephen was talking about, this wall of money coming to emerging markets, particularly pursuing our bonds. Remember, yes, we've still got the repo rate at 6, so you cut another 50, you cut another 100. We're down at 5. It's still versus 0% in the US. Can we really cut the repo rate down to 2-3%? I think that's unrealistic. It's really the Rand, as always, is determined more by international factors than by domestic fundamentals.
John, I know we've spoken about this before, and that's a Tobin tax, a tax on foreign portfolio inflows. Brazil tried it. It hasn't been very effective there. It's another thing that Cassanto's pushed forward for the agenda at the ANC's policy conference next week. Do you think this is something that could be taken seriously?
I think it would be very difficult to implement practically. We could always tax portfolio capital inflows, but those are the type of capital inflows that we want. What's going to be more difficult to tax is the short-term capital, speculative, carry trade, typical in and out money. There's just too many ways in our sophisticated financial markets these days to tax that efficiently. I don't think a Tobin tax is the way to go, and I don't think it will be implemented, and even if it is, I don't think it would be effective in stopping any currency appreciation.